What is a piece of advice that you find yourself giving consumer founders over and over?
Consumer products companies have one job, and it is to sell products. But I see so frequently people getting distracted by other activities. One of the frameworks that I always revert to is the value creation and value capture. You have to have both of those things come together to be successful in a consumer product focused business.
Hey everyone, welcome back to the Orita Podcast. I'm your host, Aaron Schwartz. Today, I'm thrilled to sit down with someone I've been learning from for years, Tina Bou Saba. From analyzing mall traffic to Harvard to Wall Street to steering CXT investments with 40 plus beauty and D2C brands in her portfolio, Tina's seen every corner of consumer. We dig into the patterns she bets on, how great brands balance art with ruthless operations, when to sprint towards retail or walk away, and why grit is still a founder superpower. Hey, Tina, thank you for
Hi.
joining this morning. I am really honored to have you here. This is like the fifth company where I've suckered you into having a live conversation with me, talking about something to do with commerce or tariffs or COVID back in the day. I think was the first time we did this. So thank you for coming on.
It is totally my pleasure. I get to hang out with you.
That's right. The best in the business. I see what you're saying. Tina, your background is amazing, and I'm gonna not do it justice if I try to rattle off LinkedIn. Can you go more than a superficial 30 seconds, like a proper background, like how you got to where you are? And I'll have a ton of follow-up, of course, but take it away, please.
Totally. Okay. So I think that my interest in the consumer space goes back all the way. Truly, as long as I can remember, I have been fascinated by consumer behavior, even as a kid. You know what I mean? I grew up in New Jersey, so I had lots of opportunity to go to the mall. And I truly think, no joke, that shaped me because as long as I can remember, I have always been fascinated, even obsessed with questions like, why do people buy this and not that, right? How do trends start? Why are some things cool and some things not cool? And that question has been in my brain, right, for decades, seriously. And so I always knew that I wanted to work in consumer broadly. Of course, that has meant different things over the course of my career, but broadly in two chapters. The first half of my career was in more institutional settings, like Wall Street type of roles. So, after college, I really had no idea, but I knew that I needed to get a job and I wanted to be able to have an apartment and live in New York. So I went to work in investment banking, which, is an excellent training ground, and you learn a lot about how to work in business. And then I went to work for a hedge fund where I covered retail and consumer stocks. And so that was like a dream for me. I learned, of course, a lot about the public markets and how to analyze public companies. But also, as part of that job, I traveled to malls around the country most weekends doing channel checks because this was a long time ago, pre-iPhone, right? And so if you wanted to know what's going on with Abercrombie and Fitch, you had to go look at the store, And so that was again, just reps on seeing consumer behavior, seeing how things are playing out in the market. I went to business school with the objective of continuing to build, my career in consumer. I was very fortunate to spend a couple of years working at L Brands, which at the time was the parent company of Victoria's Secret and Bath and Body Works. And notably, when I was working at VS, Victoria's Secret, it was truly the most beloved mall brand by American women, So it's obviously that is, 12 to 15 years ago. But that was the heyday. And so it was a terrific opportunity for me. I learned so much about, number one, brand building, right? And true customer love and loyalty, which Victoria's Secret had in spades. And also the business side in what I would describe as some of the most attractive categories in consumer, like beauty, personal care, even intimate apparel at scale. And we can talk more about all of why these are really interesting categories. I also spent some time at Sanford Bernstein back in public markets covering retail and consumer stocks. So you can see this has been like this thread that has been going on for a long time. That is all like chapter 1. Chapter 2, I wanted to do something more entrepreneurial. So about a decade ago, I started investing and advising in consumer businesses, largely brands, a little bit on the enabling technology side, and founded CXT Investments, my investment vehicle, and the rest is history, as they say. But have continued to build that out over the past decade. I've invested in more than 40 companies over that time in different capacities. And well, let me pause there. That's a lot. But the punchline is I love this space, right? And continues to excite me and intrigue me and pique my curiosity every day.
Awesome. Thank you. You're I'm trying to figure out which thread to pull on. I actually do want to stay with CXT for a minute. I would urge any founder or commerce tech, like brand founder, commerce tech, to go look at who's in your portfolio. It is like a who's who of health, wellness, skincare, beauty. Like it's pretty incredible. So I know you just glossed over it, but I do think it's worth going to take a look and checking that out.
I appreciate it.
I think your fascination with consumer, and like it's interesting to think about like your time at L Brands and then through today, is like obviously the world has changed fundamentally, but you listed a couple of things, right? Like you talked about loyalty and brand building, right? Customer love. As you think about like the different shifts, okay, brick and mortar is dead. It's all D2C. Now we're going back to omni-channel. Now we have not just Amazon, but like more channels. There's TikTok shops, whatever. What are the like through lines of the best brands beyond those, or maybe it's just those? Yeah.
Yeah, it's such a good question. So, right, I love brand. Now, I would say, I think it's important to acknowledge that, like, building a durable brand with longevity in various categories, whether that's apparel or beauty or home, right, is one path, to build potentially a great business in the consumer space. It's not the only path, right? Like, for example, there are thousands of sellers on Amazon that have built, profitable businesses selling like products, so it isn't to say that brand is everything, but certainly I think when we're talking about the types of companies that might raise venture capital or growth equity and have the potential to exit for hundreds of millions of dollars, we're generally talking about brands, and that is, and I think that it's something where, it means something in the minds of consumers, right? And it isn't intangible. And I do think that brand is an art and a science. And that's why some investors really don't like brand. And it is understandable, right? Because there is an alchemy. There's some magic. And if you invest in brands, you have to like be zen about that, and kind of be willing to say, I think that's got it. I don't know about that, right? And that instinct. And now there are lots of data points, that we would point to say, okay, this is working, But at the end of the day, I do think that someone like me and, other folks who like to invest in brands, we hope that we have some amount of intuition, around what makes a great brand. And I think truly that is, that gets built over time, right? And that's why I point to, being 15 years old, wandering around the mall, right? Yeah. And just getting those reps on like, why do people like what they like? What's working, what's not working? And of course, no one is right all the time, but there is an intuition in the brand world.
I mean, my sense, and this is gonna, I don't know if this will land right, but like, I think you have a very specific, like you have great taste, right? And kind of, like you can see it in the companies you've invested in. You and I have also talked about some of the companies that are doing very well. And my sense is like, yes, it is brand. And going back to your Wall Street days is like, actually the operational side is the thing that like allows a Huron to grow, a Curie to grow, right? It's like amazing operators behind who've also built a great brand.
That's right.
when you think about the operators and the side, are there through lines? Is it just, hey, they're deeply analytical or they deeply care, or it might just be like they have no idea, but they go hire the right finance person? Like kind of what is that like atomic level of a great team for a consumer brand? Or what are the
Yeah.
attributes they need to have?
Okay. So I was thinking about this, Aaron, and hold on. It happens that I'm going to answer the question. Hold
This is
on.
great.
And then I'm also going to ask you to answer the question because here's what I looked up. So it just so happens that this week, one of my kids is doing this entrepreneurship class for high
Cool.
school students. Okay. So they're reading this article about the 10 characteristics of successful entrepreneurs. Okay. So I'm going to really quickly rattle them off.
Great.
I already decided what I think is if I had to pick one, okay? And
Okay.
you're going to have to do that also. Okay? So ready? Curiosity, willingness to experiment, adaptability, decisiveness, self-awareness, risk tolerance, comfort with failure, persistence, innovative thinking,
No.
and long-term focus. Okay, now this is from Harvard Business School, so it must be correct. So, but look here, of course, if anyone has all of these traits, I mean, amazing,
I
right?
mean,
But
that's why you and I are friends, because I exude all of those, of course.
exactly, right? Those are unicorn entrepreneurs. But for me, okay, there is one that
Interesting.
I can quickly say, just my gut based on, my own personal experiences with entrepreneurs that I think is the single must have on this list.
I promise you I won't change mine, but I'm curious for yours first.
Yes, mine is persistence.
Interesting.
Yes, it is the grit because
Hmm.
I have found, and having, invested in more than 40 companies, but also seen thousands of companies, right? I mean, there's
Yes.
so many founders that I've stayed connected with over many years as peers, as, colleagues, friends. And the biggest thing I just say, it's like entrepreneurship, building business is so hard, right?
Yeah.
It is like eating shit every day. And
Yeah.
so, right?
Yeah.
And so you have to be wired to wake up every day like I'm going to go out there and crush it again. And there's always problems, right? Always problems. And so it's interesting. An entrepreneur who will remain nameless, but who's amazing, one of the founders of one of my portfolio companies, said to me once something I will never forget. She said, Tina, I don't hear no. And that there is a piece of that, right? And you
I
don't
love it.
get delusional, but like you mostly hear no. And so you have to hear it as, not now, or I don't think so, right? Otherwise, forget it. It's too depressing.
You've convinced me. The one that doesn't feel like it's there is speed, which
Oh, that's a good
kind of
point.
which is my annoying thing that I say to our team all the time. The
Yeah, yeah,
my immediate actual reaction was comfort with failure.
yeah,
And I think I agree with you on the founder side. I think on the team side, it is actually comfort with failure. And so one thing that we were talking about a lot internally is like we can plan and we can come up with a strategy for 3 months, or we can just start and screw up.
yeah,
And the example I give to the team, which is like an unfair example because it's much easier as a founder because you can like say something and then like, yep, you can guarantee that you can deliver it if you talk to a customer. But at some point in February with Orita, we hit a point where like we didn't grow as quickly as I thought we should be growing. And the like debate that DB, one of my co-founders, and I had was it was about there's like a gap. It's like, oh, we want a certain win rate, but there were like brands where we were certain we could drive a ton of incremental revenue for them and we weren't closing them. So how do we close the gap of like deals that we just are like, this is a no brainer. Like we will personally refund them if they don't get high ROI type of thing. Where it's just like, oh my God, how do we lose those? And so literally we were changing the deck over a week and I would go into a call and I would open up the deck and it would literally be different. There would be like a placeholder slide and I'd just be like, hey, sorry, like that, we're mid process updating this. And I was like very comfortable, like just doing it. And that is something that is so hard for a team to be comfortable doing is be like, hey, I'm actually going to walk in, know I'm going to make a mistake and just like being comfortable with that failure as long as I quickly learn. And that is like very much on my mind for our team where I'm like, guys, it is
Mhm.
okay to fail. Like as long as we learn and move quickly and like iterate, like don't have a catastrophic failure, right? Like there's a difference, but like make
Yeah.
mistakes. But yeah, I think I'm deeply aligned with your call about persistence. Orita's my fourth company. The second one I think I ran for 3.5 years too long, where every investor was like, stop. And I was like, no, no, you gave me money. I'm gonna keep
Yeah.
going. And I was persistent. And so I think
Yeah.
I've
Yeah.
gone too far on one side instead of like being a rational actor.
Oh, that's so interesting. I mean, I was definitely going to say, like, when I was, for me, the very close, like, second thing was the comfort with failure. Like, that's where, because I agree with you, it's almost like a philosophical reframing of what failure is,
Yeah.
And what I also felt like, because I consider myself an entrepreneur also, in that,
Yeah.
I have built my business as an investor. And I would say that the comfort with failure, candidly, has been the hardest thing for me,
Yeah.
because also I'm like of a generation where it's like, no mistakes, you know what I mean? And so
Yeah.
it's really different, than how like younger folks now are, especially here, like in California, and in startup world, it's so much around like, right, these small failures as like learnings as
Yeah.
opposed to catastrophes.
Um, yeah. I don't have anything sage to say here. I think we are always wrong as founders and as operators. And I think brands always, like, I think everybody is wrong. And I say this with our pricing. I'm like, our pricing is wrong. The problem is we don't know if it's too high or too low.
Interesting.
And so, like, instead of us being like, hey, this is scientifically proven, it's like, okay, like, this is reasonable. Are we going to create more value? And then how do we right size and make it smarter? I think that is like the iteration on top of that for every single part of the business is the thing in my mind that defines like, I'm not talking about like hyperscale or like public
Yeah.
companies, but like companies that are doing a better job for their customers are the ones who are like constantly trying to figure out, okay, am I
Yeah.
creating enough value? Hmm.
Really,
This is turning into a
really
very good therapy
interesting.
session, Tina. I'm like, maybe
But
just start, like, how do you really feel? Uh,
totally. But your point on speed, that's a really good call out. And I actually think that probably, because if this particular list had been written by like folks at Berkeley or at Stanford, I bet you speed would have been on it. I
yeah,
actually think partly, and again, because it's just one list, but it was fun to chat through it. But I think that partly what's going on is in the sort of in like the Harvard Business School world, entrepreneurship, I actually think it is sometimes like has a slightly different like nuanced. It's not just about like startups,
yeah,
whereas in the California was all about
it's all,
startups.
yeah, that's
Whereas at
right.
Harvard Business School, it could be a startup, but it could also be like, buying a dry cleaning business, right? Where it's not necessarily about speed. You know what I mean? So
Yeah,
anyway, it's interesting, but you make a really good point that I think in particular in the world of like venture-backed, highly competitive marketplace, speed is really, really important. And that's something that like people do have to get comfortable with in that world.
interesting. Can you, an unfair question, you're allowed to say I don't have an answer. If you think about the difference between your like like commerce tech portfolio, or just tech portfolio, and it doesn't have to be people in your portfolio, just like you have enough friends who've started
Yeah.
businesses, and the attributes about those versus like who's successful in that space versus who's successful as a brand founder, like are there meaningful differences? Is it actually like the same underpinning, but like just taste in different areas? I don't know.
Yeah, it's a really good question. Okay, so there are a lot of differences. I want to think about how to be concise about this because, see, partly as a starting point, I would identify the fact that B2C or B2B2C and B2B businesses have completely different audiences. And so the latter, the audience, of course, is like other business people or inclusive of, your enterprise customers or, your investors or potential investors, and there you have a shared language that is pretty common. You know what I mean? Whereas B2C, particularly in branded consumer, your audience is completely different. And that's why, for example, it's so interesting because like fundamentally, just taking one side note, if I have like one core skill, it's strategy, right? Like I am a strategist first and foremost. And so I always go into everything with like, what is the objective, you know? And so it's interesting if you see a business decides, oh, okay, we just did this fundraise. We're gonna have our press strategy, right? Okay, so if you're B2B, right, you're in the B2B press because you want your potential customers, right, other enterprises or future investors, right, that you might to like know, like we're real, we just did our fundraise, this is great, we're in business, you know, because it does matter if you are an enterprise customer. You want to know that the company that you're talking to isn't going to disappear in 6 months, right? It's real. They're, you know, they have real investors. They're sticking around. On the other hand, your end consumer, you know, the American or the global consumer, right? Individual buying things, they don't care who your investors are, right? They don't care if you raise money. They don't care about any of those things, right? It doesn't matter, right? It's a totally different audience. And so, like, that's why it's interesting. The reason I make this point around strategy is because, like, it's interesting that sometimes I think if they're in a particular community, sometimes founders think like, who are we speaking to? It's nice. I think there's confusion around like, oh, we're speaking to the investor community or other businesses. It's like, no, really, at the end of the day, what matters is your consumer, right? Everything falls from that. And so I mention that and give that as an example because I think that founders in the B2B world versus like B2C, they first and foremost have to really understand like who is the audience, you know, like who is this for? The other thing that I would say is particularly in categories like beauty, for example, frequently, not always, but frequently, especially over the past like decade, the founder is a forward-facing public founder. And you know, that is a particular subset of founders, but it is a crucially important one. You know, like look at just yesterday, just as an example, Chriselle Lim, her brand Fleur was acquired by TSG, right? And that was very much like her as the forward-facing founder. She's incredible. She has, you know, a huge community, tons of authority and authenticity in this space. And that is like a unique thing, I would say, really like over the past decade-ish, you know,
Yeah.
that has become such a thing. And so what I would also say is frequently that type of founder, often, not always, but is coming more from the world, right, of influencers and creators, not from the world of MBAs, you know? And so I always like, this is kind of like a little bit of a thing I always remind people about when someone comes to me, you know, who's finished graduating from business school or something and says, I want to start a beauty company. And like, that's great. But I think it is important to think through, you know, you have a certain set of skills as a business person, but like, does it make sense to combine with or figure out how to also have that like forward-facing set of skills, right? Because what that audience, that end consumer is looking for is very different than that what the enterprise audience is looking for, you know? So I know I'm getting a little in the weeds,
No, this is
but
great.
it is important because like I think, you know, let's say I say I'm going to start the Tina Bou Saba beauty business. It's like, no one cares what I like. I'm not a forward-facing founder. It's like I could be the business person with some sort of, you know, forward-facing founder, but like the average consumer, they don't care what my MBA view on the mascara is, right? Like, don't care, you know? Whereas the enterprise person might be quite interested in that, you know? So anyway,
Yeah.
point being, this, I'm going to zoom out, but like there are huge differences and it behooves founders to really always be thinking about like, who is my audience?
I love it. Man, I have so many different thoughts. First of all, Fleur is a customer of Orita. I'm not saying we had anything to do with
That's
Abercrombie.
perfect.
I
I
mean, very,
didn't
very, very new, very,
know
very
that.
new customer, but
That's awesome.
they're
Great.
just, I mean, they're an
Beautiful
incredible brand.
brand.
We were talking
Beautiful
about them
brand.
this morning. So that was such exciting news.
That's great.
You know, one of my buddies from business school, Neil Lesh, is a co-founder of Tinted, Live Tinted, if you know that
Yeah.
brand.
Another beautiful brand.
So it's his cousin who's an incredible influencer. Neil
Yes.
Lesh is like one of the best business folks. Do you know what I mean? Like he
Yes,
gets it, like he
exactly.
knows how to operate and just like
Exactly.
So that very much rings true. The one thing that I've been thinking about a lot with Orita, so like I'm an inch deep, mile wide, and I like having conversations like this. What we are actually actively trying to do is get, two co-founders, DB and Zach, and they're both machine learning engineers. And we're getting DB speaking more because he's brilliant. He's like a Harvard PhD, and he doesn't
Wow.
need to talk about
Yeah.
Orita and how we do this, that, and the other, but like the conceit of the business is you have an insane amount of data as a brand. We look at your data, we help you with segmentation, you make a bunch of money. And it's like a very simple concept, but it's one that like, unless you are like DB and Zach have been in commerce for 10 plus years, like they are baller machine learning
Yeah.
engineers. Like you need an insane amount of like talent and treasure to be able to go build this
Yeah.
way. Um, and so we're actually getting him to speak more because it sounds really silly, but he's like a forward facing founder where it's just like, we need people to know that there's so many like AI name only companies or
Yeah.
we do segmentation, but they're just like, they're not doing anything for lack of a
Yep.
better term. It'd be like if I were to do this without ML engineers, like that's what the companies that we like compete with are.
Yeah.
And so I'm like, oh, people should just talk to DB. And then they'll be like, oh shit, these guys are actually for real. And
Yep.
so it is a funny parallel, maybe
That's
not
super
relevant for all.
interesting. That's
Yeah.
super interesting. But so much of it is about like credibility and
Yeah. 100%.
authority. You know what I mean? And the live tinted example is a great one. Like I think that, in my experience, that combination of, that it's the art and the science,
Yeah.
right? Is so
Yeah.
powerful. And in fact, I'm going to come back to that in 1 second because there's another thing that I want to mention that I think about all of the time. Before I do, I think that it's so interesting that you mentioned that in the context of Orita because that you're right, there is a parallel there. And it's like if you're a potential customer of your company, you are right there. You're being bombarded with different vendors who want to sell you something. Right? Really, like, how do you cut through the noise and
Yeah.
figure out who's credible, who's authority, who is like truly an expert
Yeah.
is super, super important.
Yeah. People know I'm not. It's funny. Like when we go through, I can tell you what our pitch is, but it's like,
Yeah.
I get my background and it's cool. I started a shipping company in Loop and whatever,
Yeah.
like right, worked there for a while. Uh, And I'm like, but I don't matter. Like this is the ML and data science team is why you're hiring us. It's not like, oh, Aaron knows a lot of people. It's like these guys
But
actually know how to build something unique.
yeah, but okay. So it's so interesting. Two thoughts. The first one is I think, and like I observe this, the job of the founder, and I'm thinking about this primarily through the lens of that consumer brand founder, that forward
Yeah.
facing founder, but it's all consuming. It is so much. And, that's why when I've worked with founders like who are that type of founder, I always encourage even, early on, potentially like a chief of staff role. And then as the company gets bigger, it's a president, maybe eventually a CEO, right? And there's so many examples of successful partnerships that have looked like that because it's like almost impossible to do all of those things, right? There are very few examples. There are some, but there are very few examples of, that unicorn who just has all of those skills and also can somehow, like pull gold from air every day and like have, create 30 hours out of 24 to do all of these things, right? It's like not, it's asking too much of one person, you know what I mean? And
Yeah.
so I'm a big fan of like these complementary skill sets in the leadership teams. And I think it's all the more important when someone really is out there being the public face and, doing all that work because it's exhausting, super time consuming, right? And it's just got to be balanced.
For sure. Um, I want to go down two different threads, but one is about strategy stuff. I'm curious if you can give an example, right? Like, you're like an early investor and you're a strategist, and it's like you've seen so much. What are the types of things that a founder might call you about? And if there's like an anecdote about like, I don't know, something non-obvious where you're like advising a founder where it's like, oh, everybody thinks it's this, but it's, I don't know, like tease out wherever you want to go, but mostly just like, what are the questions that folks are calling you about at the earlier stages?
Yeah. So I think that a couple of big ones. So certainly one is like fundraising and investor related issues. And so that's one. We'll come back to that. The second one is, and this is where I think it's particularly like someone like me can be very helpful, is how do you tell your story, right? Like creating the narrative. And that's something I've spent a lot of time on throughout my career, and is something that I think is crucially important. Because you're, as a founder or a leader, you're always telling the story, whether it's like internally to your team, right? And essentially it's like it's sales, you know what I mean? But like, how do you um tell the story of your company and have it make sense in a way that is also like acknowledging of the broader macro context? And that's something where I think like someone like me, who is not deep in the weeds of the day to day, can help to do, because I'm seeing like the big picture, and sometimes you say, I'll say like to a company, like, you know what, I wouldn't emphasize that, like that's going to raise this question or that, and it's just a matter of how do you like package that story in a way that is resonant, right? And that's really important, specifically around, fundraising, or like pitching a retailer or making a key hire, so that narrative, that storytelling piece, I think is like, again, just crucially important, as it relates to like fundraising and stuff, which is something I spent a lot of time on, over the years with, well, many different companies. And I think that's, there's a lot of like strategic, just broader questions around that. The I'd say that, to your point around like advice, that like I think one of the hardest decisions that consumer brands specifically have to make is potentially like saying no or not now to particular retail opportunities. Like that's something that, again, like kind of today, I think is top of mind. Like, because there's the thing is, it's important, like everyone wants to be wanted, right? Like that's like a human thing, right? So if someone's like, we want you, you're like, yay, but any retailer, right, it is an enormous undertaking. And it's also important to keep in mind, and this may sound like a little bit cynical, but I really believe this very fundamentally. There is an insatiable appetite in amongst consumers, which is then reflected in retailers and buyers, for newness. And so, as much as you might think, oh, we have this opportunity today, what happens? Most of the time, I believe, like, if you continue to do a good job building that strong pull among the end consumer, you will have opportunities the next year or the following year, because there's just this cycle of like newness, so that, and like that's how I see it today. That could change, but I think that it is so important to ensure. Sometimes brands will start, for example, with like smaller retailers, or retailers where there may be just a few doors, but they're extremely influential. Like, just for example, like say Erewhon or Credo or something, right? They're very wonderful, very validating retail partners, not huge from a volume perspective for like, a new emerging brand. And, that's just an example. But I think before you say, oh, we're going to roll out to 500 doors, like that requires an enormous amount of team resources, millions of dollars for working capital, right? To support that. And like, if you're not ready, I think the chances of it being successful are low. And then you really often don't get another chance, And
Yeah.
so that's something I feel like consumer brands have to just be very thoughtful and intentional about, and like, figuring out what is the right, it's not a race. It really is not a race.
It also sounds like even if you are ready and you have the capital, if I think about the world of newness, you might do really well in that store, but you also might be replaced and not earn the next PO. Not because you screwed up at all, but literally there's just somebody else who's newer, who is in your category, who's gets
Yes.
the shot.
Yes. And this is, I'm going to go a little bit in the weeds here, but this is a huge, I would say, topic challenge in beauty, particularly today, because, the is incredibly saturated, right? With brands, because, and so let me just quickly define, when I say beauty, I'm specifically talking about like the four key categories of skin, color, hair, fragrance. And so I'm not including in that like wellness and other things that are sort of beauty adjacent, because I actually think the dynamics in that are different. But in the core areas of beauty, which is an amazing industry, right, with really high margins, the potential for fantastic profitability, but it is incredibly crowded and fiercely competitive. And the barriers to entry are so low now, right? Because you have like relatively easy access to, contract manufacturers, right? The ability to create your brand and stuff like relatively cheaply, right? You use social media, to promote and to start building it. So just if I say, oh, I'm going to start Tina Bou Saba Beauty, like I could have something in like 6 months, you know what I mean? Like, and without that, just again, some rinky dink little operation, right? But like the barriers to start it are nothing practically, and however, right, that means that it's so crowded. And so the barriers to scaling are extremely high, And so then you have this like virality and this, this sort of like voracious newness that I think like TikTok kind of like epitomizes, right? And and so as a result, I think a big challenge for brands now is like, how do you balance the newness and like healthy growth, but like you want to have it, give it time to play out, and also, yeah, how do you like can prevent or defend yourself against what is like that next thing, and a lot of that, it definitely comes down to ensuring like really working on that brand piece and the customer love piece and the community, right? And all those things that are somewhat intangible, but that a retailer can't, giveth and taketh away. And that's the work that like the great brands are doing to really building for, like longevity and for the future. And those are the types of brands like Fleur, for example, right, that are getting acquired, and really that where the acquirer, whether it's a strategic or private equity firm, is looking at it and saying, we can see how this is going to grow over the next 10 years and what the terminal value is, and they plug in all their numbers, right, and they get their NPV, and then deal's done, right? Easy. But I think that this is like a huge area of focus in the industry right now.
Very different from tech startup where we don't understand what profit is. So
Right.
fundamentally different.
Totally different. And a question that I get a lot is like, what scale should a brand be profitable? Because, and unfortunately, I do not have like a hard answer to that. And it also depends on the margin structure of the company, right? Because for example, like food and bev, sometimes you see like successful brands that are doing well over $100 million before they're making money, because it's really low margin and very capital intensive, very distribution intensive, and that's why you see those raise a lot of money.
You're forward costing and saying like, hey, I can't price based on my cost today. I need to price where the market will. Yep.
Exactly. Whereas for beauty, you will see particularly brands where they have some efficient customer acquisition mechanism, whether it's an influencer or, some sort of built-in audience, so they can have like lower than average marketing costs. You could see brands, being profitable in the tens of millions of dollars of sales, but it's important like that. So again, no hard and fast answer, but it is really important for a brand to be thoughtful always around like what does good look like in our space? What does great look like in our space? And how are we building our model along the way to get there? Because as they say, right, like hope is not a strategy, And so if we can't see how this is going to work at reasonable scale, we need to do more work now.
I've seen a shift even in the last year of people realizing like everybody gets that it's more expensive to acquire customers, like iOS 14, Meta pricing going up. Yeah, right. So like everybody gets that. It was free money for a long time and it no longer is. I think there's actually a much deeper appreciation for retention marketing now, which is like you get to increase your LTV if you over email or over text or over whatever people, they will unsubscribe and then you cannot message them again. And then you've got to go pay a machine to give you more than that net new person. And so I think about this from that side. I think about from the loyalty side, which you were talking about before, from the community building side, and just like getting people to engage and kind of hang around the hoop longer.
Is crucial. It's
Yeah.
crucial. Retention is like everything, right? I feel like it's absolutely vital.
Yeah.
That's why one of the, if you think about, in the beginning of this conversation, we were talking about direct to consumer and, kind of how does that as a strategy, what are the implications of that like today? And one of the things that I have seen is even though most brands have adopted, most successful brands have adopted some sort of omni-channel strategy, right? Whether that's direct to consumer and Amazon and Walmart or some other retailer, or you name it, depending on the category and price point, there are some categories, I should say some types of businesses that I think do work really well direct to consumer and can scale significantly. And one of them is like these like subscription type of businesses like wellness and supplements, right? And that is, a category that really does lend itself to like that type of customer behavior. So that you
I
can
mean,
invest up front.
we have about 10 minutes left, and what I actually wanted to switch to this topic, so I'm glad you led us there. But like, you kind of mentioned beauty saturated. Like, obviously, there are still going to be amazing companies, and
Of
like I know
course,
you're not saying
totally.
they're right. And what are the categories that you're most intrigued by right now, where you're like, oh, here is, if not like a blue ocean, but like here's more of a white space or more of an
Yeah.
opportunity. You mentioned wellness. I don't know if you want to double click there, or if there are other categories as well.
Yeah. So I mean, I love the wellness category. And part of what I think is going on is, if you think about like that, the proverbial pie, right? In beauty, which again, amazing industry. And yes, there will be many great, brands created and sold for hundreds of millions of dollars, no question. But the pie, after having extremely like high growth over the past like 21, 22, 23, pie will generally, I think, revert to a more like normalized growth rate, right? Like low single digit growth, which is not bad, but that means that really the way any one brand is growing is more through market share gains, right, than that rapidly expanding pie. And what I think is interesting about the wellness space is I think the pie is growing much more quickly because you have consumers who are increasingly like younger and frankly across age groups, like focused on that like self-care and preventative care and like being proactive, not reactive, whether it's with supplements or healthy food. Like look at like the poppy acquisition, you just see, or siete, like you see a lot of these interesting things happening. And then also, and it also includes not only like products, but also even like these like multi-unit, like four-wall type of businesses, whether it's, like med spas or longevity clinics, right? There's just so much going on in that space. And so I think it's, we're earlier. It's kind of like what clean beauty was in, say, 2016, when it was like all of a sudden there's so much interest, now it's kind of like much more mature, so to speak. I think that in wellness, we're just earlier on in that curves. I just think there's just more white space, more opportunity, like things like longevity, metabolic health, right? Like the GLP-1s have brought attention to that, but also benefits beyond blood sugar management or people wanting to lose weight, right? There's just so much like heightened awareness. Women's health, also like huge
There's
opportunity.
some very cool perimenopause startups.
Yeah.
Like it's like actually looking at different stages of somebody's life, which, is so obvious, but for whatever reason hasn't been done.
No, exactly. There's so much opportunity there. And there's opportunity for products, for like telehealth type of models, for in-person, for wall type of models, right? Like so, and not all of those are venture backable type of businesses, right? They'll have different financing needs. But broadly speaking, I think that space is like extremely interesting. I also think even if you look at like recently, Ulta, which is, one of the top beauty specialty retailers in the US, Ulta is increasing their wellness, right? I just saw like they brought in ritual supplements and I think Nutrafol also. And so that, like, I would expect that will continue to be built out. So, And, same Target also has brought, I think they recently launched a Groot. So you just see there's a lot of interest at more that like mainstream consumer level.
That is really interesting. For somebody who's been in e-commerce for 15 years, I'm like a garbage consumer. I just like, I find something I like and I just do it. And like, I read about stuff, but I don't. Yeah, the idea of like wellness brands infiltrating the beauty space. I love the framing you used of like that it's actually an expanding market versus like taking market share as well. Um, with the four walls companies, obviously like there's a different funding mechanism. You need to like pay rent, right? Do you see those as like they also need to be deeply tech enabled and like there's the tech side of the house, or like they also should have some like not just like brick and mortar subscription to the doctor, to the care center, but or is that like, do you think about those separately?
That is a good question. I'll have to think about that. I have typically felt like best in class businesses in that space are very sophisticated in their use of different tech tools, even things like it's like scheduling, it's following up, it's reminders, but not building proprietary technology. As a general matter, I am skeptical of businesses that try to build proprietary technology because tech is hard enough and competitive enough as it is. So generally speaking, there is something off the shelf, right? That you'd be better served, making really smart decisions around the tools that you use. But that could change. But it's the same thing with, and I'm going to have to mention AI. We have been talking for so long, we haven't talked about AI at all. But what I would say is this, like, as it relates for consumer businesses, it's like, you you want to be really thoughtful and smart about your use of tools, right? You want to be smart, but you don't need to be first. And you don't need to, for the most part, you don't need to be building things yourself. In fact, like going back 10, 15 years, brands that built things themselves ended up raising a lot of money. And if they had, a few years later, there's Shopify, you know what I mean? And so, and that, all the ecosystem. And I mean, again, you're an expert in this, but I tend to be of the mind that let specialists build their specialist things and then be really smart around the tools that you use.
Random anecdote. At the time when I switched Modify from like Interspire, which was part of BigCommerce, whatever, to Shopify, I had a call with Andy Dunn, who was amazing and generous and all the things. And I just remember him being like, dude, you should go with Spree Commerce. Like, and in retrospect, it was like Bonobos and Away, and there was one
Totally.
other, and I'm forgetting who it was. I'm like, those are maybe it was Glossier. And I was like, the three marquee brands by far use that. And it was in retrospect, like if they just gone Shopify, like how much easier would their lives have been? And they of course were able to build great businesses.
Right.
We sold Modify for nothing.
But it's amazing though that today, or even 5 years ago, it was obvious that, of course, like Shopify was the only name in town but at that time it was not the only game in town. It was not. It was not clear at all. And so it's interesting to even think about that, like how over a period of, I feel like a decade, Shopify became totally dominant.
Yeah.
When you look at the stock chart, it's like,
I love it. I mean, this is my life, so I'm
exactly.
bullish.
Totally. No, it's amazing. I mean, it's amazing how easy they make it. And I should have mentioned that when I was talking about the barriers to entry. That's, of course, Shopify being, another just really easy, hey, instantly, okay, but you're up, you're online.
I have two more questions for you. One is going to take you a very long time to answer, which is like, what should I do about my skincare routine? Which is there isn't one, and I just like use Dove soap. What am I supposed to do here? Okay.
Dove's great. Dove is a great, gentle soap. I have no objections to that. The single biggest thing, people always ask me, I think single most important thing anyone can do for their skin is to wear sunscreen every day. Okay. I mean, I started, so as you could see, I have extremely fair skin, which has been kind of like a challenge over my whole life to be so careful. And I started wearing sunscreen on my face when I was probably 11 years old. And so it's just like decades of facial sunscreen use. And I do think that over time you accumulate benefits, but it's never too late to start. So I really think that it's like, find your favorite one, but it's so important.
Good. You
Both
started
aesthetically and in terms of preventing, skin cancer.
Yeah. I was going to say I'll start at 43, but I'll probably start at 45. I need to like ease into doing this.
No, tomorrow.
All right. What about today, Tina? Why not now? Speed, right? Persistence. This is good.
Persistence.
My last question, and more of an open one for you. Like thinking about brand founders are going to watch this, like, what is like a piece of advice that you find yourself giving consumer founders over and over? Like, what is something that you just want to drill into the founder's head? And if there's a couple pieces like run downhill, but wanted to create space for you to just share advice.
Yes. So there is definitely one piece of advice. I give lots of advice. Some of it is probably welcomed. Some of it is quietly rejected, unsolicited, all good, right? It's all good. And at the end of the day, a founder has to decide how to run their business 100%. Minority investors do not run the company. This is specific to consumer brands. So this is not the advice that I would give to a company like yours. At the end of the day, okay, consumer products companies have one job, and it is to sell products. Okay, sell products is commercial strategy, and every other activity, and this is why I mentioned things like developing proprietary tech stuff. Every other activity has to directly support the objective of selling products. Now, we say, oh, okay, we need to do a rebrand or a bit. Of course, these are all important things. But I see so frequently people losing sight of that North Star of selling products and getting distracted by other activities that can drift further and further away from what is the objective of the business. So I'm going to frame this another way, which is one of it, like I love, you and I both went to business school. We've been in business for a long time. I like frameworks. And one of the very simple frameworks that I always like revert to when I'm thinking about things is the value creation and value capture, okay? Because it is not enough to only create value, right? That could be an art project, right? As they say, right? You need to wrap it in a business model, in a commercial strategy against which you can execute, and frequently in the consumer brand world, you see businesses that have a really great idea for value creation and inadequate attention paid to value capture. That is not a business. A business, by definition, has to make money, i.e., has to capture value, right? And it's easy to lose sight of this. And so this is something that I am obsessed with, truly, and spend a lot of time thinking about and a lot of time working on with different people. But you have to have both of those things come together to be successful in a consumer product focused business.
I love it. Thank you. Tina, I love all of our chats. Thank you for taking the time. As always, I get a bunch of notes from just chatting with you, and
Anytime.
my mind is
So
spinning on a
fun.
couple of the topics. But just want to say thanks again, and
Thanks for having me.
hope you have a great rest of the day.
Do you wish your D2C brand had the marketing superpowers of big tech? At Orita.ai, we've done the hard, mathy machine learning work to make that happen. Our advanced AI, once reserved for Silicon Valley giants, finds high-intent customers, pauses those who aren't ready to buy, and even zaps the bots. Over 150 plus e-commerce brands trust Orita to add hundreds of thousands of dollars in incremental revenue with our AI. If you're a marketer at a D2C brand, it's time to level up. Visit Orita.ai for a free email engagement audit and turn your customer list into a revenue engine.